So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again at Option Alpha, and welcome back to The Daily Call. Today we're going to be answering the question, how do I keep my covered call stock from being assigned? And so the short answer to this is that since you are an option seller, you really don't have the choice, right? It's the choice of the option buyer, whoever bought that option contract from you, as to whether they want to assign the contract or not. Now, it's not the direct person, obviously. It goes through a whole random process through the OCC and then down to the brokers. So it is a random process, but I'm saying anybody who bought the other opposing side to that, they ultimately have the choice as the option buyer. But there's a couple things you have to know about assignment. I think this will help out as to understanding if your option contract is at risk of assignment. So if your covered call is at risk of assignment. The first thing is, how much time do you have until expiration? Now, again, most option assignment happens the last week, even the last couple of days of expiration. And even more so than that, many option contracts never actually go through the exercise and assignment process. They're just typically closed out of. So if you have a lot of time between now and expiration, there's probably a good chance that you're not going to be assigned, even if you're in the money, because there's a lot of extrinsic value that's left in those contracts, right? So as you get closer to expiration, then your risk of assignment starts to increase, and then would depend on how far you are in the money or not. Now, the second thing is how far your option contract is in the money. How deep are your strike prices from where the actual stock is trading? So if you sold the 105 call options and the stock is trading at 125, then yeah, that's a pretty deep in the money call option. You probably are at higher risk of assignment. Again, all other things being equal, you're probably at much higher risk of assignment. Now, if you have that same position and you're 5 days away from expiration, there's probably a really good likelihood that you're going to be assigned because you're much closer to expiration and because you're really deep in the money. Now, if you're 5 days away from expiration, but you sold the 105 call option and the stock is trading at 106, well, it's a little bit in the money, but it's not too far in the money at all. Probably has a lot of extrinsic value still left because it's right on the edge of being profitable or not. So you're probably not at that big of a risk of assignment. So again, it really kind of depends on those two main factors is, how far you are from expiration and how deep in the money or not is your option contract. From there, ultimately, it is up to the option buyer to decide if they want to assign you the shares or not. Now, as an options trader or a covered call trader, in either case, it really doesn't matter. If you were to be assigned and then your stock were to be covered by that position and go away, well, guess what? If you want to get back into the position for the next month, buy 100 new shares at whatever the market price is and sell another covered call in the next month. Ultimately, it really doesn't matter. It's not going to make that big of a difference whether you go through it, your call option gets assigned or not, or your stock gets assigned away or not. You could get right back into the same position, basically re-engineer it from the ground up and keep trading that covered call position. So hopefully this helps out. As always, if you guys have any questions, let us know. Just head on over to optionalpha.com/ask and leave me a private voicemail. You just have to click the big red button in the middle of the screen and we'll get your question queued up here for the daily call. Until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.